Hey everyone, this is Rangadad. Not financial advice, just the way I'm looking at the market. I'm going to do a special video this morning where first part of the video I will focus on the main charts. That if you want to sort of be confident that we're out of a bear market, or just the way to look at it as confirmation that we are in a bear market and how to trade through that. Um, yeah, I'm going to concentrate on a couple of key charts for that. So this one, for those that have been watching for a while, you'll know this one's a key chart for me. Only something I realized, did some work on it fairly recently, but when I went back and sort of back tested, if we look at it compared to Bitcoin, about the S&P 500, these for the time being to make it a bit more obvious. Essentially, throughout the data that we have here for total crypto market cap divided by stable coins, I've only got the main ones here, but this, whenever we break down from these key uptrends in bull markets, that signifies the start of a bear market. Okay, and a pretty significant drop in most cases. Now, this one here, obviously, we did find a base. And interestingly, that base was, we went from there, it was pretty close to that trend line. Not perfect, but what you want to be looking out for is you want to be looking out for the break, the retrace, and the rejection. If we break back above these lines, then that's fine. Just like we did here, we can go up to highs. With this one, like to figure out if you're back in an uptrend or not, you want to be looking at breaks of the downward trend line. So obviously we had a downward market here. We broke through that trend line and we didn't really look back. And then same thing again, we eventually formed a trend line through the bottom of this and we broke below it again. We found another base that becomes the trend line to break. We went to new all-time high. Funnily enough, we hit that high at a very key level. So another trend line through all the highs of previous markets, previous periods, and we rejected off that. Broke through, retested, moved away. That was the start of the bear market proper. And the fact that we were putting in lower highs here just shows you the momentum was dwindling in crypto. And we were coming off a lot of retail money being sucked out of the market and that COVID stimulus stuff. So same thing here. You can look at all sorts of trend lines that form. The trend lines on this are actually quite strong, and breaks of them, like this one here, you could have a trend line there, break, retest, move away. We actually got a bump in the market. Once we found a level here for peak, you can then draw your trend line, and essentially you're looking for breaks of that to form your base. Again, this one here, this trend line through the top, that was a key break of that trend line, retest of it, and then we came back. That was the bottom of the market. I wish I was watching this chart back in the day. And then since then, if we come through the bottom here, we formed a trend line that has been tested multiple times, and we've just broken. We are in the process of testing it. This is going to be a very critical retest. I'm actually leaning towards we may get through this and we may get up into these sort of areas, potentially this circle here. There are some key trend lines here. The horizontal levels can work as well, but find the diagonal trend lines on this particular chart work a little bit better. But anyway, this is our key level here. Technically, we did sort of retest it yesterday, but so this particular candle here, and there's lots of signs in the market that we could break through this and go a bit higher. What we want to be looking out for here is if we do break through this, if we reject off this again, then it's all over. But if we do break through this and we actually get through this downward trend here with a retest, and this is why I've said in the last couple of videos it's going to be choppy, 1 foot out the door, because we've got so much resistance. That one there is going to be resistance. If we break above that and sort of, we don't have to retest this particular diagonal, but if we do and we break further above, then obviously you're going to get resistance against this trend line, but I suspect we could actually push a little bit higher. And the reason is, the reason I suspect that is this flush on the markets has been so severe and fear is at such high levels after just basically a 10% correction on the S&P that I think the push up from here for Wall Street should be significant. The issues with that is Wall Street's been selling into retail for the last month or so, maybe a little bit longer. If you listen to this channel, you would have heard me say that plenty of times. So we could actually be in for a bigger correction. And I'll show you the other charts that sort of suggesting that's a potential. But this one's the key one. If we get back above this, confirm back above, and we go on a bit of a run, then bull market's not exactly cancelled yet, but I would expect this line here to actually find the top if we go on a big. This one here is the one that concerns me, because there is some levels there, near there, I think, that are going to be quite important. If we look at the actual Bitcoin chart, you're looking at the value area low. It's basically in line with those two candles there, which are on total versus stables. And there isn't much above that in terms of vector candle recovery on the daily. There is other stuff there, but on the daily, I think we're going to struggle to get through this value area. Particularly point of control will be a strong one, but we've got so much resistance to get through that. So the beauty of this is we've potentially, depending on how you measure this double top, potentially done that measured move. We have hit a key supply. We picked up a lot of liquidity today just with that sweep down into the 76s. Even higher, yeah, mid 76s. It was a little bit below it, but at the moment we're just retesting the middle of this channel, and that's a key retest as well. So there is lots of overhead resistance here. The 200 EMA on the daily is just above us, and the 50 well above us as well. So we're probably going to be hitting the top of this channel at the same sort of time 15 minutes coming in, unless we go on a quick run to the upside. Then we'll actually break out of this channel, at least on a week basis. So the key levels I'm looking at the moment, we've just hit one of them. They're sort of around that 84 mark, 83, high 83s. Top of this channel around the 89, and then the value area low around 93. And obviously 96.5 for the point of control. They're key levels for me. The momentum, if we look at that as well, let's actually, sorry, I'll go back here and just turn on momentum. So we are in the bearish control zone momentum wise, but it does look like it wants to potentially turn soon. We haven't got any confirmation of that yet on the daily, but if we're coming down to the 1 hour, we're actually quite high on the 1 hour. So potentially another little pullback, but once you're in that bullish control zone, it can stay up there for a while. So just be mindful of that too. Again, on the 1 hour, we've got 50 and the 200 EMA. The 200 EMA is sitting right at that bull market support trend line, that key trend. So that's going to be a very interesting level. Watch for the reaction there. If we break through it, come back and retest it on the 1 hour, that's actually a really bullish sign. I'd be expecting us to at least test this level up here reasonably quickly. Okay. And there are some vector candles here, even on the total versus stables, that could do with some recovering. Again, that was a pretty good trend line to bounce off. So total versus stables can give you some really good levels, some good trend lines that you don't necessarily get the same way on Bitcoin chart itself. Okay. So that's total versus stable coins is a really key one for me. The other one, so just going to go quickly. And monthly. All right, so this one here, it's the inflation adjusted S&P 500. And typically when you're a long way away from the lower trend lines, you do get a pretty decent correction. Once you start correcting in a big way, start breaking down key levels, and when it looks like what the market looks like at the moment. So that was September 2000, start of the dot-com crash. We basically came back into a key horizontal trend line. This was the 2007-2008 GFC. Interesting that inflation adjusted, we didn't actually make a new high on that. But we did come down through that level as well. Now we're forming another lower trend line. That's going to be a pretty significant drop on S&P 500. I actually have a feeling that over time, maybe not this spread out, but over the next 5 years, I guess, we could actually break down below this trend line, similar to what we did in the GFC. And just something in the back of my mind at the moment is the COVID low level. That's kind of where I'm thinking at the moment, which is around 3.5 on the S&P 500 inflation adjusted, but that'll actually be pretty similar on the S&P 500 itself. It's going to take a while to get there. We're going to have bounces, but just be mindful that it can be pretty well straight down until this point. So this is why a lot of the big guys have been selling. This is overextended. Value isn't there anymore. And once we start to hit these levels, then I'm going to be starting to look to actually buy back into the market in general. I've been out of risk assets for a couple of months now. And I've mainly been in gold and treasuries and stuff. That's worked pretty well for me. And I've just been playing around with a small bit of capital in crypto, just trading it to keep the gambler in me happy. So yeah, not really going to be shifting out of treasuries until we sort of, and I've been in bear market funds. So in Australia, we have these particular ones here. These are bear market funds. As you can see, they've been hammered. This one started just after the GFC, I think. You can see they spike pretty hard when there's a correction. So we've actually had a little spike in this. I've been averaging in since, well, I think it was around here, maybe a little bit higher even, but I went in pretty hard around the bottom here, especially when we sort of double bottomed. So I'm actually in profit quite a bit on that one so far. And these are the sort of things that you can do to protect yourself when we are getting close to the end of a cycle. Move into this kind of charts. Just go back in. So the other key one we're looking at, XLP versus SPY. So essentially, you got consumer staples are starting to outpace the SPY. And typically when that happens, same with the total crypto versus stable coins, when we start to break key downtrend levels, then you start to peak on markets. And that's when you get the bigger sort of correction. Like these corrections in here, we weren't breaking any key levels on the XLP versus SPY. So you know that's just that's a buy the dip situation. This one here was a key breakdown or break up of this chart. Okay. There was actually a warning shot. We broke a trend line here. That was the warning shot. There was a bit of sideways chop, another pump up on this drop here. And then we broke this longer sort of trend line that was formed. And then it obviously went into a bear market. So similar thing here, downward trend line, we broke it and we went into a decent correction. You don't always retest it, although there was a quick retest of that trend line here. I haven't got it drawn in, but trust me on that one. But that's kind of what you're looking at for key market breaks. This was the GFC one. Obviously, we broke and we never actually really came back. There was a small pullback, but I wouldn't really call it a great trend retest unless you actually draw this as your trend line. But the GFC was a bit different because this was going sideways while the market was going up after the dot-com bust. So the dot-com bust is probably the better example of this, similar to what we got today. Now, the other thing is we were at levels at the bottom here that were below the levels of the dot-com bust. So, this one fired off early too. Again, there's multiple sort of trend lines you got here, and we could have very similar market in that, we break these initial ones that are sort of shorter term trend lines. And then we do get some corrections, but we get some bounces, we get some chop. We went sideways from April 2000 to August 2000 before we actually had that final drop. That's potentially what we're going to have here. Like, it's not necessarily this drop is too quick for my mind, unless we're going into a Great Depression, where the Great Depression we dropped like 80% in a couple of weeks or something. don't know that's going to be the case, but because there are just the sentiment is quite high with smart money. So, yeah, these are key trend line breaks. The one we've got happening right at the moment, as I said, we actually reached levels lower than the dot-com boom and bust. And, we're starting to pull back on this today. So that's a good sign for a little bounce here. It's just for me, where the bounce finishes is going to be interesting. So if we hit this level and bounce back off, and this is a pretty strong trend line. It's actually, for me, it's stronger than some of the ones in the dot-com bust. But I guess the other thing we've got to be aware of is there's probably another trend line through here. So this is where it could get choppy. It could pull back up into this level. Wouldn't surprise me, somewhere in between those, the red and the green line there. There are some vector candles in here, which I haven't tested to see whether they recover vector candles that well in here, but pull back into these levels, a decent bounce on S&P 500. That wouldn't surprise me. And then we're going to get resistance most likely from this level here. It has been resistance quite a bit. And then it's going to be choppy, but I think this one here, a break of that will be the one that freaks out. There will be something in the system actually properly breaks, and we'll get most likely a spike. So this is definitely the start of a bear market sort of signal. As I said, I actually have a feeling that we're going to potentially chop around a bit. It's going to be more like this is the first warning shot, similar to the dot-com bust. But it's one of the key charts that I'm going to be watching. Because turns on this downside with momentum, they're going to signal that the market should be going up. Same thing on the equal weight. It's very similar chart. But the thing with equal weight is just slightly different levels. So I'm watching both the equal weight and the regular SPY. So that's another key chart for me. Financials. You want to see financials turn around. If financial starts breaking sort of this previous low and doesn't immediately pop back above it, like the next day, then that's a sign that we could actually be going deeper quicker. And obviously, I go on about these ones, but home builders and home construction are both very critical levels at the moment. Again, I still think this will play out just based on what I'm seeing on the other charts at the moment. If we do break below that, it is a sign that recession is going to be a pretty massive one. At the moment, there's no real break. Could get down into that level and bounce, but at this stage, I would say that's going to be the retest of this breakdown. And realistically, if we do break above this and we have another sort of bounce retest, it's going to come down probably somewhere in this region here, somewhere out into later than June. But at the moment, things are looking pretty scary, which is when you typically do want to be buying. Another key chart, DJI versus gold. This is just keeps breaking down. And that isn't a good sign. We're coming into a level which may get a bounce. But the fact that we're sort of rolling over on DJI and JT versus gold, again, it's not typically a good sign. These levels have previously sort of marked the bottom of, the COVID drop is getting pretty close to where we are at the moment. So, there's signs here that it could be getting close to a local bottom, but in general, this doesn't look great for the long term. We could be getting back down into levels around here, which we haven't seen for quite a while. But yeah, breakdown of key levels on DJI and DJT versus gold can signify that bigger drops are coming. And that did signify the current market top, really. So keep an eye on these. You want to see these bouncing before you really expect too much of a bounce on the markets. And then obviously the skews bounced yesterday, so that should support the market, at least starting to bottom today. That was a decent bounce. But we want to see, the bears will want to see a lower high on this, on the skew. The skew tends to make lower highs when we're starting to actually roll over in markets. And it kind of looks like it's potentially going to do that as well. So the VIX one day, it's still pulling back today a little bit, but it hasn't broken that yesterday's level. So again, that's an interesting one. If we make a lower high on this and we're making a lower low on the market, then that's a bit of divergence there. It's, to me, a sign that there is a little bit of chance that we'll actually head up. So they're the key charts that I'm looking at. The other one, to potentially find bottoms, it's not as good, but just hitting key levels on percentage of stocks above the 50-day moving average, like that, there's COVID low. But typically, when you're down into these levels, down below 10, you're finding a pretty good low on the market. Okay? Even, that was the lows. We're getting close to the lows. Actually, making higher lows on this typically signifies a market bottom when you're in a big crash. We have .com bust. Yeah, again, sort of higher lows on percentage of stocks above 50-day moving average, but lower lows on S&P 500. Is a good sign that you're hitting bottoms, especially if you have come into that 10 read. We're not there yet, so we could have further downside. But yeah, that's at the moment. This isn't really giving me any indication either way, but they're the key charts I'm looking at, along with global liquidity. So the other thing with global liquidity that we want to be looking at, we'll just go to the weekly. It paints a better picture, I think. Typically, you get runs up on global liquidity when you get a decent push on markets. This data only goes back to just after the .com bust, unfortunately. But, generally, if global liquidity is dropping, you're sort of going sideways or down. Putting in lower highs on global liquidity can lead to a pretty decent downtrend. And generally, the market has been following the global liquidity moves, since the start of this as a read. The fact that we've made a new all-time high without making a higher global liquidity, that concerns me quite a bit. Just because that to me signifies that this has been the blow off top in markets. The fact that we've got smart money's been selling in a big way to retail at the top here. That combined with the fact that global liquidity is low, never made that higher high, that is a concern. Now, we are still teetering around this level. Break back above this level, and that could be a good sign for markets. But if we find resistance up here, if we just never get up here, we break back down below that trend line there. Trend lines change so much if you go between dailies and weeklies and stuff. But if we break back below that, then it's going to be another sign that there's further downside to come. Okay. So they're the key charts. I'll now just go and do the general market scan. Stream's current bitrate 0. Oh no, looks like it's okay. So basically, let's have a look at. Just going to Qs. Qs looks like it's getting support from this trend line. Momentum's in the bearish control zone. Still not great, but we do still have this vector candle here to recover. So we haven't broken back up above this trend either, which did provide support on the way down. This could just be vector candle recovery. So be a little bit careful of this one. Again, on the NASDAQ itself, it's not looking particularly great. We do have this vector in here. I don't know why that support level is there. Probably should. But 18,400, 18,450. That's potential, but at the same time, if we are going to go on a bit of a recovery bounce, dead cat bounce, kind of expect it in the next little bit. Just going to have a quick look. 100. So JOLTS job openings, there was actually an increase in job openings. So that's actually in support of the market being a little bit stronger than expected. Was above forecast, so it's core inflation tonight my time is going to be key. It's definitely one to watch. These news events can be used in either direction. It's just a matter of where this wants to find at the bottom. So just looking at the SPY, we've tapped into this area, but it actually could come a bit lower. We just take measured move. It does come into the bottom of this level. That's a sort of a double top under measured move. So if we don't turn around like on the news today, and there are some like equal weight NASDAQ is at a reasonable level to turn around. This is a fairly big trend line here that it needs to hold. Start breaking down from that. It's great. Yeah, the minis, I'd like to see them back above this, but at the moment they've tapped into this vector candle. Just extend. That is a pretty decent level. Should be a bit of support there too, but looks like we may come down a little bit lower. Actually, I was expecting today to sweep a bit lower first and sweep into that level, but still, catching the bottom on these is really quite tricky when such a violent drop. Equal weight is probably one that gives us a little bit of a clue here. There was a decent trend line through here that it's just tapped into and bounced off. Pretty negative looking candle, but some stopping volume there as well. Plenty of vectors above to recover. So equal weight S&P 500s suggesting that we could actually bounce from here. Whereas the equal weight Qs, I'd probably like to see come back a little bit first, but just have to see how it goes. There is a vector block in here with potential for some support too. Again, we've only just tapped into the top end of that though. IWM, and good sort of doji candle at a level where you expect a fair bit of supply. Supply, demand. That is again, could get a little bit further down before we go up, but this concerns me a little bit. Industrials is dropping through that level, so it's breaking below that vector candle. It's breaking out of that channel to the downside as well after recovering that vector. Most of these vectors have been recovered. So that's a little concerning that industrials is kind of in no man's land. It needs to really pull back up above this level here, above 135. Otherwise, I'd suggest that the market actually potentially got a bit still decent couple like XLY, XLP has absolutely smashed. That was another good indicator that we were getting close to the top, the break of that level there. And it's come back into a level where it's probably going to get a bit of, but again, watch out, have pretty nasty handle quite a bit further. But bounces up into this resistance level. On the cards, I'd be watching it around the 250 PMAs though, in line with this trend line here. So XLP versus SPY, I already got that. This needs to pull back from here back into a retest of moving averages and or at least this trend line. We bounce off this trend line again, and that's going to lead to a decent sell-off market. Equal weight XLY versus XLP. probably at a bit better level. Still like to see it come down a little bit further. What I don't really want to see is it coming back up and testing these sort of vector candle recoveries and stuff off moving averages. That would be nasty. In which case I would be surprised to actually find support here. This level here. As well. Got horizontal level, and yeah, pulling away. Something I pointed out yesterday that would happen, but realistically, if we close below this candle, if we open that candle, then expect it to come down. So ARE's at a decent level for a bounce here. Has closed the gap here. That's a good sign. We need to get ARE to bounce. XLF, they need that to bounce as well. I'm not seeing any big transactions come through here, so just be aware of that. The VIX is coming back as well. We have sort of a tweezer top on this as well. VIX has been a weird one. This has been a grind on the VIX rather than a real blow off sort of spike. As I said before, the skew bounced yesterday, so we've got a doji sort of flat day today. If this is up again, then we should. Said that's putting in a lower high at the moment. Want to see this start to pull back though, to really suggesting bottom. DAX again, it looks like the money's flowing out of the DAX and the UK 100 markets that sort of pumped. And S&P 500 was going sideways and or dropping. Japanese market's kind of holding at the moment. It needs to hold this level too. This is a pretty key level for it. TLT still chopping around. This was a major buy zone for TLT previously. Kind of expect it to go up still over the coming months. High yield junk, decent level here with the 200 EMA, but kind of prefer for it to really hit this trend line. Could draw this trend line through here, but so that's a pretty nasty looking day on high yield junk. Momentum and BBWP are aligned for more downside on this too, so 70 could be a key level for that. Aussie bonds, they're actually looking at a LQDIF. That's a nasty looking break. I'd want to see this. I mean, it is again a pretty strong level here. We've had lots of bounces off this sort of level. But you want to see that bounce like tomorrow. If that closes tomorrow below this level, actually that, yeah, just want to see confirmation of a breakdown. Hey, Nachi.
I'll break.
I'm breaking. Okay. So, the lights are on up there if you want to turn the TV on. So 2-year and 10-year, again, just playing around with this level. I wouldn't call this necessarily a break to the upside yet, but they're sort of retesting key levels. Realistically, you want Trump's trying to get yields down. He's already mentioned that. His finance dude, can't remember what his title was actually, but he's basically tasked with uh, fixing the economy, and the way they're going to do that is to try and get yields down. Problem is, yields typically come down when the economy's up the shit. So he's pretty well got to crash that to bring them down. Interesting one here, copper. The copper has had a big bounce today. Not a vector candle, but we have basically recovered this vector candle and retested the 382 essentially. I kind of expect copper to keep going up just based on this chart. Momentum, BBWP is up. That's a good sign for markets. If copper's breaking this high here, then markets should go on a bounce. Gold, that's actually a pretty bullish day on gold as well. Not really breaking these previous highs. If gold does break, say, at 29.30, then it'll probably come up and test the top range, top part of this channel. But at this stage, that's not a confirmed move for me. I did take another little nibble on gold yesterday on the super account, just because the Aussie dollar's going up as well. So this actually, even if gold comes back a little bit, this could keep going. But it's kind of a tricky relationship, that one. Silver versus gold ratio looks like it's pushing to the upside as well. Still not convinced by silver at the moment. If we break back above this trend line, then yeah, it's probably not a bad buy. Somewhere around there, because it probably will run harder than gold if they both go on run. But at the moment, that's not a confirmed buy for me. Oil, it's holding support here. And I don't know that the Saudis will let oil drop below that level. We could come into this week here a little bit more, but oil low will keep CPI low as well, which means the Fed can drop rates a bit as well. But having that jolt job openings higher than expected gives the Fed an excuse to not change things, and especially when Trump's forcing rates lower himself anyway, it doesn't really give the Fed much need to do anything. Into a little bit covered that. Mag 7 is actually in bear market territory. Break below that level too. That's really interesting. Mag 7. It needs to bounce here. Like the next couple of days, we need to get back above into this green box, above that downward trend line. Otherwise, it's going to look pretty nasty. Like you're talking another fair bit down. Oops, that was the wrong level. So far, we've gone down 22%. Yesterday, it was just under, just 21%. That's bear market territory for S&P anyway. Tech and Mag 7 probably a little bit, but that there would be a 32% drop if we made it to vector candle recovery. I don't think we'll get straight there. I think we'll get there eventually and potentially lower, but yeah, it's right. Sounds like the family's up. Might have to go. Aussie breaking down from that support line, it's very interesting to me as well. There is another one in here which had a lot of action, like it's probably more of a highly traded zone, which we have hit and bounced from, but that looks nasty. It's not a good look at all. It's just a matter of when is the market going to rip to the upside. That's what I'm interested. The other interesting thing is the volume coming through the bottom here in 2015 versus volume that we're getting through the top here. So lots of volume trading through the tops. That's telling you that the big guys were really making their moves and they were selling across the top, selling into retail. So yeah, it's unfolding as potentially a pretty nasty market. Good level here for ETH. It did swipe the low there. Again, I think next 6 months we'll probably find another top and potentially be lower than that. But you know, ETH does have a pretty good target around 2,500 and higher. So value area low for ETH. So we could get back over $3,000. Value area low plus vector candle recovery. If we get up to the value area high, there is a vector candle recovery just above that as well. But wow, that's going to be a bounce and a half. But this is the key one. Looks like we'll probably retest this in the next day or so, and we'll see what happens with that. To me, this is showing us that the money flow just isn't quite there into the markets at the moment. Quickly on liquidity. So we are sweeping a lot of shorts at the moment. Had a decent violent pullback last night. That was, I actually set an alarm on my watch to wake up at 1 a.m. And just because I had a feeling that it was going to pull back on me. So I closed the majority of my shorts when I did wake up and doubled down on some of my longs. So that worked out pretty well for me today. I still think this will grind up and test those key levels on total versus stable coins, which is probably going to be up around that 86K mark. Could be choppy, but I think in general that's the way we're going. Sentiment, as I said, we're getting pretty high levels now for smart money, so they can still go higher. Today's read will be interesting for me because dumb money is probably going to be at their like full capitulation level. Yeah, once they start dropping again, smart money starts dropping, then that's a pretty good sign that we've found a local bottom, short-term bottom. Interestingly, we are coming back up to close to the average mining costs. IBIT. So the other thing was yesterday after the close, we did get a pretty decent trade, 25th largest on IBIT, and we have gone up since then. So that was a key indicator I did point out in the Discord that potentially found a little bottom, but one trade at 25th largest ever doesn't necessarily counteract what we had going on through the tops here. So we still haven't made the top 10 in compared to this distribution area here. So these guys aren't necessarily loading up yet. So that's something to keep in mind. That's sort of leading to my dead cat bounce theory at the moment. Same thing on Coinbase. We had a decent trade at the bottom. So it all depends on your time frame. So I trade on a very different time frame to what I do for my super fund. I did have a nibble on the BTC ETF on the super fund yesterday as well, but that was very much a DCA level for me, just in case we get up and we go on a big run for whatever reason. Mara's not necessarily bouncing as much as the others. XLP, again, we haven't had any real major buys there on consumer staples. So we did have a sweep at the close on consumer discretionary, though. We haven't had anything major come through at the bottom. So this looks like it could be finding a bit of a bottom here as well on XLY, which should be good for the markets. Technology is getting some decent bids at the bottom here. It's kind of what you want to see. You want to see technology leading the way. Healthcare, those hasn't had anything at the bottom here, which surprised me a little bit. So healthcare may drop off again. So the defensives may actually get a bit of a sell-off. Little concern we haven't got anything decent on XLF as well. So that's the financial sector. Yeah, that's... Oh man, it's laggy today. It's going to go XLU. Wow, what is going on with my data? So XLF still hasn't got anything big. It had a lot of distribution up here. That concerns me a bit for the markets in general. But these guys can wait for months before they start to buy back in. So if you're looking for a proper like market bottom, then look for these guys to get back involved. Let's go the last year and just see what they were doing. Yeah, so they tend to buy at the lows, distribute on the way up. There were some big trades up here, but nothing compared to what they were doing down here. So the fact that we're falling through these levels, they were probably getting rid of positions in there. Have a quick look on XLU. It's another defensive one. Yeah, getting a little drop today. So that's not a bad sign. You kind of want to see defensives dropping away as consumer discretionary is bouncing. But again, we're not getting any massive buys in here. It looks like it'll be a dead cat bounce, whatever we're getting. Retrace for Bitcoin into the 200 EMA on the 15-minute, so around 81,500 would make sense. I do expect it to at least go into the 200 EMA, the 800 EMA, so the 200 on the 1 hour. That's probably my target for tomorrow at least. But if we break back down below these levels, it could look a bit nasty. This was a liquidity run here. Spot CVD is sort of holding the fort at the moment. It's still making sort of higher low. So that's a good sign. Futures is just starting to tick up as well. People are starting to get interested in longing it, but there's still a few shorters in the mix, so got to be a little bit careful. The bid-ask delta putting a little bit of pressure to the downside through this region here as well, but that kind of got wiped out. We're back putting pressure to the upside at the moment. Not seeing any definitive sort of W pattern here either yet. So we could still see sort of a move down into this level, back into 78, 77 level, potentially even a sweep because we did leave some liquidity down here on this last sweep. Just if we look at the 1 month, there was a little bit more it could have taken. I'm surprised it didn't really sweep down into the 76 level. So it's something to be mindful of. But at this stage, I'm still leaning towards more of a move up into this sort of 86 to even 87 on this chart. Can't ignore this up here either. That's not bad looking. But the other thing is just keep in mind in this environment, when you zoom out to the 1 year chart for liquidity, there is a decent target down here, down to around that 45k marker that everyone was calling for when we were dropping down into here. Funnily enough, that total versus stable coins chart, that picked up the low there really well. So yeah, that's kind of probably a bear market target, potentially lower than that if we're going into full-blown recession depression thing. But it really depends for me. Like, this is why the shorter term charts are going to be important, the daily charts in particular, because Bitcoin could run with the narrative that, you know, people are picking it up because the dollars are going to go up the shit, inflation's going to go up the shit. It's, you know, it's going to be a way to hold the value in the money that you got at the moment. So there is still that narrative that could drive Bitcoin to go up when not everything is going down, but it could actually lead to at least Bitcoin consolidating and going more sideways, because gold is likely to go up further as well. I do still think gold's got some time left on it to the upside. In fact, it could really rip quite hard to the upside, just based on previous cycles, similar cycles. So we could find a bottom on Bitcoin before the market finds a bottom. It's kind of what I'm saying. So it's worthwhile paying attention to, and just note that, you know, when you look at it on this sort of scale compared to what the liquidity that we had in here shorting, there's not as much up here to come into, really. So, and the levels that we had in here around that 97 and stuff, they kind of disappear in comparison. You got to really drop your threshold to start to show them. That just makes this level look worse. So bounces are likely. I've got no doubt about that. I think there's still a bit left in this, but total versus stables is where it's at. This is the key one, because this breakdown of these levels has been 100% every time leads to further downside, like a retest and a breakdown. It doesn't bode well. And again, 100% in the past doesn't mean 100% in the future. So just be aware of that. But yeah, these trend lines have been pretty good on this chart for take profit levels, rejection levels, things like that. Okay.